Welcome. Today is Thursday, December 9th. I'm Jeff Huge, Chief Investment Officer at JWH Investment Partners and the editor of Alpha Insights. And this is your Daily Five. Today, we want to talk about first the market and where we are and how we're looking at the market, and give you kind of an insight as to what we said last time we spoke and where we are today, and then really dig a little deeper into the components of the market and try and identify the very strongest stock that we could invest our money in today. So let's start. Let's kick off with chart number one. What we're looking at right now is the S&P 500. And this is a 2-year daily close chart. Now, a lot of people like to look at daily range charts. This would be like your typical candlestick chart, which shows you, the entire range of every single day's trading action. And what I like about daily close charts is they show you what actually happened, not how we actually got there each day, but what the end result of all the daily noise really amounted to. And, it gives me a picture of what I would define as a textbook bull market. And I actually grabbed my copy of Edwards and McGee and cracked it open and tried to get their definition of a bull market specifically. This goes back to 1942, I believe, is my first edition. And, there's a lot in there. There's probably 3 or 4 chapters dedicated to it. And, I don't even know how many pages, maybe 100, 150 pages dedicated to describing the characteristics in detail of a bull market. But, I tried to grab these salient points. And the first one is that a bull market advance is really defined or characterized by a sustained uptrend. An elongated uptrend, I think, is the exact words that they use. And that's what I'm looking at right here. And, the uptrend by definition is really just a series of higher highs followed by higher lows. And again, we can see that that's exactly what we're looking at in this picture. The uptrend can further be illustrated by a series of moving averages that capture the short-term, intermediate term, and long-term price swings. And, we can see that they're traditionally represented by the 20-day, the 50-day, and the 200-day moving averages. And I put on here the 50 and the 200 just to kind of keep things clean. But other characteristics that they mentioned that are pretty common to bull market advances are, one, a very well-defined trend channel. And that's what we're looking at here since about, say June of 2020 or 2020, a very well-defined trend channel. And then additionally, periodic consolidation ranges that are bound by clear support and resistance levels. And again, that's exactly what I'm looking at here. And the most recent of those was the 45.37 high bound by the 42.78 October swing low. So you kind of had that September, October swing period there that created a nice setup for a breakout. And that's exactly what we got in late October, I believe the 20th, when we made new all-time record highs and broke out. And that breakout gave us the ability to project a target price of 4,800 on the S&P 500. And we got up to around 47.44, give or take. And now we've checked back to that, what I would call initial support level, 45.37, which was the closing high back in September. And we also held the 50-day moving average and lower boundary of channel trend support. So we got a nice bounce off of that. We're challenging the old high of 47.44. And based on the price action and the breadth thrust that we saw Monday and Tuesday, my suspicion is that we're going to get a nice follow-through rally into year end that should take us up to our stated price target of 4,800 or higher. In fact, once we break out from that 47.44 level, we can actually count a new higher price target to 49.85. So I don't know if we'll get there this year, but it's possible. And I certainly think the 4,800 is in the cards before year end. So let's cross our fingers and hope we're right about that. The next chart I want to take you to takes a look at our Elliott wave analysis. Now, we actually presented this chart. We call it That Was Then. We presented this chart on November 4th. So we're looking at really the chart that we presented to you about a month ago and the Elliott wave forecast that we made. And we were looking for a high to come into play probably around that late, or I should say end of week, November 4th, 5th. And then we were looking for a pullback probably into around the 38.2% retracement level, and then another rally to new highs. So let's take a look at the next chart, chart 2B, and we'll see what actually happened. Indeed, we did get a pullback and a rally to a new high, and then a more substantial pullback, about 5.2%, I believe. And the entirety of that was a three-wave pullback. It looks like, in our view, an expanded flat correction of the ABC variety. And that probably marked wave 4, minor wave 4 of this final wave progression that we're looking for to complete cycle wave, a primary wave 5 of cycle wave 5. So, you know, the blown up version on the right shows that, yes, we're in progress on that, and we're looking for a new all-time high to take us to at least 4,800, like I mentioned, possibly higher. We can get that breakout projection upwards of, say, 4,985 on the stretch target. But let's shoot for 4,800 for now, and we'll reevaluate. So we like the direction of the market. We like the setup here, and we think it's basically played out according to plan. So let's take a look at chart number 3. Chart number 3 is kind of a look under the hood. As you may recall in past presentations, I've spent a lot of time on relative strength trends, and I like to use relative rotation graphs. It's a great tool developed by Julius de Kempner, StockCharts regular, and I think a very creative guy who's created an algorithm that identifies the trend of relative strength on, you know, kind of a short, intermediate, and long-term basis, and really creates a presentation of data visualization, if you will, that kind of allows you to look at the entire market based on sectors as we've presented it here on the left-hand side, and see what's leading. And so, you know, what we see on the leading quadrant is energy, discretionary, and most recently tech. Now, I like all three of these sectors, but, you know, it's fair to say at this point that energy is losing its momentum. And it's a pretty established leadership sector at this point. So we're pretty long in the tooth. And so it's not that we're avoiding energy, we're just not committing new capital to it right now. Discretionary is a similar situation. Again, it's long in the tooth. It's starting to lose a little bit of its momentum, although it's holding up much better than energy here. But the thing I like about tech is that it is emerging leadership. It's not that far behind energy and discretionary in terms of its relative strength, but its momentum is accelerating to the upside, and it's actually rotating back into the leading quadrant from the weakening quadrant, which gives us a lot of confidence that we're earlier in that leadership trend. So if we take a look at technology specifically on the right-hand side of the screen, we're going to look at the various industry groups that actually make up the tech sector. And, you know, to put it in perspective, we've got tech hardware, network equipment, software and services, and disk drives, and semiconductors. And what we're seeing here on the circle that I've highlighted with the red circle is that the semiconductor index is accelerating to the upside into the leading quadrant, while the rest of the group is somewhat weak, lagging. You know, disk drives are starting to come around, but they're still well behind semiconductors. So semis really stand out as, in our opinion, the strongest group within the strongest sector with the best relative strength momentum at this point. So let's take a look at chart number 4 and dig just a little bit deeper into the semiconductor space itself. What I've done here is I've taken all of the constituents within the semiconductor sector, and I've broken them down and ranked them by performance as well as relative strength. And what we can see is that, you know, we've got some great leadership here. Xilinx, AMD, NVIDIA, you know, up and to the right, all have great leadership, both relative strength and relative strength momentum, but they're a little stretched. They're definitely long in the tooth. They're not emerging relative strength. Now we can look at CLAC and Broadcom, And they're, still earlier in their trend, but we're starting to see a distinct fall off in the momentum of relative strength. But what really stands out is Teradyne, TER. We've circled that in red. It is not just emerging relative strength within that semiconductor space, but the momentum is by far and away the strongest momentum with the best acceleration angle of any, which tells us that Teradyne is got really the best potential to lead of any of the stocks within semiconductors. So we're really looking at stocks that are exceeding the S&P 500 on a relative strength basis, that are exhibiting high relative strength versus the sector itself and versus the industry group with accelerating momentum. And the other characteristics that we really want to focus on are stocks that are in consolidation breakouts and making new 52-week highs. So let's take a look at chart number 5 and just dig a little bit deeper into Teradyne itself. And lo and behold, looking at a 3-year weekly chart, we can see that Teradyne has just resolved above a key resistance level that has defined a multi-month, almost 10-month consolidation base formation. There's a lot of ways to draw the lines here. We've kind of illustrated a triangle as well as a rectangle, as well as a double bottom. Call it what you will. I would call it a lateral consolidation phase that has been fully resolved to the upside. And what's interesting about this is that the new all-time high that was generated, we published this chart based on yesterday's closing price. So yesterday, basically. And the bullish inflection above what was prior key resistance, both daily and weekly, really gives us an opportunity to project multiple upside targets. But on a bare minimum, we think the upside potential would carry to about 190. And of course, 190 is a nice upside target here. It gives us about 30 points of upside, a little less than 20%. Traders might set an initial stop loss provision on this based upon 1 weekly ATR, which is about 2 daily ATRs below the entry point of 160 here. And that would give you a pretty solid 3-to-1 positive risk use. So we'd use a risk budget at about 150 for shorter term oriented traders. And that gives you a 3-to-1 attractive positive risk use. Now, investors who are a little longer term, they might use the weekly close below the 10-week exponential moving average. That would give you a very liberal risk budget and keep you in the stock should we enter a period of volatility here, but the stock still remains above its consolidation range. And so, we love the relative strength characteristics here. We absolutely love the breakout and the acceleration off of that breakout. And we think the risk budget, or I should say the risk reward of this particular trade looks especially attractive. So we think Teradyne is the strongest stock in the strongest group, in the strongest emerging relative strength sector in the S&P 500. And we would strongly recommend traders and investors give it their consideration as a candidate to be included in their portfolio on the long side. With that, I would just invite any and all of you to take a look at our website, follow us on Twitter. If you're interested in our research, we're on Nucleus 195 under Alpha Insights. You can find us on LinkedIn or just send us an email if you want to chat or have any questions. We'd be happy to engage in any dialogue that's constructive. And, I wish you the best. Thanks for watching today and good luck trading.
Hey, Grayson Rose here with StockCharts. Thank you so much for watching. I hope you enjoyed that video. If you did, consider giving it a like down below, maybe leave us a comment, and if you're new to the channel, you can subscribe at the link up above. We're gonna bring you daily content from an incredible collection of technical analysts and financial experts.